ACC will kick off the cement sector earnings today, even as government's infrastructure push and a pickup in construction activities boosting volumes. Operational challenges remain for most cement makers. Nickey Mirchandani standing by with a heads up of what one can expect from the entire sector. Nickey, good morning.
Hi Neeraj, I'm going to start off with the comparison on YOY basis. We're expecting good set of numbers on YOY basis, mainly on account of low base. But then if you look at sequential performance, the seasonality is expected to weigh on the performance of these companies sequentially. So let's start off with the volume picture for the players, which are divided into three categories. That's the pan-India basis, South-based basis, and North-based cement players. Now, pan-India players are expected to, on an average, registered around 16% growth on year-on-year basis, which is expected to be higher as compared to South-North. So now if you look at on pan-India basis, only UltraTech Cement is expected to post a 22% growth out there, mainly on account of its expansion. And if you look at the South-based players, well, Orient Cement and Indian Cement too are expected to post a double-digit growth in terms of its volume. And from if you look at the North base, you had 8.9% growth on an average. So if you look at that overall picture, you will have the pan-India basis players performing well, and then you have the South base, which is mainly on account of the demand led by Andhra Pradesh and Telangana. However, the Rajasthan mining ban issues are still expected to weigh down on the volumes of these North-based players. Second in the list, we have the revenue performance of these companies. Here, the picture is a little different. Obviously, we have the pan-India basis players performing well. We're expecting on an average a 16% uptick in terms of the revenue growth on YOY basis in this quarter for these companies, but then North-based companies are expected to do better as compared to that of South. That's mainly on account of the pricing power prevailing in this region on quarterly basis. Let's just look at the pricing power chart there. If you look at the trend for this quarter on year-on-year basis, it's only the central region which has managed to show a 6% uptick out there on YOY basis. Rest all the regions have seen sharp cuts. However, the trend has been muted for eastern and western region. We've seen sharp cuts coming in the south-based companies, where your cement per bag price has been cut by as much as 6%. Following that is the north-based companies which have taken a cut of more than 3 rupees per bag on YOY basis. Besides that, I'd like to talk a little bit about the operational performance of the company, and the power and fuel cost comes into picture on account of that. We're seeing a sharp 22% uptick in pet coke prices. $122 per ton is the prevailing rate right now, October 2018, and that compares to $110 per ton that we've seen back a year ago. With that, if you look at the EBITDA per ton performance, it's a negative picture for most of them except for ACC and Ambuja, which are expected to fare better on account of efficiency, which are expected to kick in. For UltraTech Cement, we're expecting a flattish picture. For JK Cement, it's a dismal picture. India Cement too is expected to see a sharp cut of more than 24% based on the power and fuel cost, which is expected to weigh in or eat into the top line performance of these players.